following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 118. NASDAQ is down 81. S&Ps are off 3.5. Gold contract down $8.60, trading at $12.23 an ounce. Silver down 15 cents, $15.43 an ounce. Copper off a penny and a half, $2.78 a pound. Light sweet crude up 27 cents, $69.57 a barrel. Notes and bonds. You get the 10-year note down 22 ticks. 10-year note down 10 ticks, 119.10. 30-year off 22 ticks, 142.23. King dollar up 416 ticks, trading 94.545. The euro is at 116.45 to $1 US. The yen is trading at 111.19 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do we have out here? Okay, so we get a sideways market in the S&Ps. The SPY's down 74 cents, big deal. Bottom line is that it's trying to get into the highs that were established out here all the way back in January 26. That high is 286.62. We got to a price point yesterday of 284.37. Right now you're laying out here at 283.29. NDX 100, the 3 Qs. What do we have with the 3 Qs? Even with Facebook getting slammed out here, bottom line is that they are hanging tough. They're down $2.70, but bottom line is that you're still up at the highs. The high of yesterday was out here, 182.93. Right now, we are trading at 180.13. Notes and bonds. We take a look at the note and bond market. We have with the note and bond market, they both are coming into their strength from May. Bottom line, we'll see whether they can hold that baby. The 10-year is right at it, 119.11. We're at 119.10 right now on the 10-year. You're coming into that with 1.2 million contracts versus 3.4. So you're going to need a lot more conviction in order to basically get into that. Well, you can get into the lower price, but the bottom line is that if you don't get into it with conviction behind the move, that baby will come right back topside. Inside the 30-year, the number on the 30-year is 142.14. We've got to 142.21. We've done 219,000 contracts, which is light contract volume. That little baby is going into 602,000 contracts. So big numbers out here. Gold contract. What do we have with gold? Gold contract, they turn around, they slam gold once again. Well, when you're talking percentage-wise, it's not a slam, but bottom line is that when you see it down $8, you know, $8 is $8. Percentage-wise, you got that baby down 0.6%. What we've done out here, you know, 2 days ago, 2 days ago we hit a low out there at the 12.18 number on this contract. We're at 12.23 right now. When we did get slammed down at that 2.30. That has some volume down there, so we'll see whether it can get up and out of this lower level. Silver, they slammed at the same point. This is when the dollar went topside. Silver is trading right now. Where is she? Silver's trading down 1%. Silver is always more volatile than gold, whether it's going on the way up or not, or the way down. Silver's done 53,000 contracts out here. Now, the difference with silver, this is pretty cool, actually. So what silver has done, you know, silver actually got to a higher high out here today, and it's going to need a lot more juice in order to get into lower price, because you actually, as you got to the higher highs, you're backing down into 100,000 contracts. So we'll see if, in fact, it can get more traction on the way down. We look at this intraday. It's the same move that occurred. They occurred out there at 2:30 this afternoon. If we go over to the good old King Dollar, what you're going to see at King Dollar, I suspect that's where we went up another couple hundred ticks on King Dollar. Let's go take a look. DXU8. So King Dollar out here. Yeah, that started right in this morning, actually. Yeah, 8 o'clock this morning. So that really didn't get, that got a small push, but not a huge push. When you do look at King Dollar, though, what you're going to see is that yesterday, bottom line, you had no sellers as King Dollar came back down. Yesterday we did 19,000 contracts. The bottom line is that you're going into 17,000 contracts. You're going into 19,000 contracts. You're going into the strength of 57,000 contracts. In order for King Dollar to break down, you need an expansion of volume on the way down. Now, what has happened is that each and every time that we're up at that 95, bottom line, King Dollar's got slammed. The way that this is bouncing right now, it looks like King Dollar does want to make a shot for about another 100 ticks higher. The high that was generated last week before Trump come out and start hammering the Fed, it went to 95,440. That was the high. Now, the low of that high is 94,665. Some of the higher volume equities out here, this is what you have. The market's going to be looking for, well, the bulls are going to be looking for Amazon to save the NDX 100 as well as the NASDAQ Composite at 401 this afternoon. Facebook is down at $42. If we go over and take a look at Facebook, what you're going to see, which is pretty wild, man, you take a look at Facebook. We put this on a weekly basis, and what you're going to see is that you're actually coming right back to the last time that it's got slammed down in the week of March 23rd. The high of that is 177, the low is 159. Now check this out. We did 451 million shares there. We're not going to do 450 million this week. We're at 250 right now. So, you know, bottom line, yes, it's getting smoked. That is right where that basically can stop and reject that price. And if that's what you get, Facebook's going to blow some minds again and basically shake it off. Amazon, we go take a look at Amazon. They are selling Amazon down out here today, so this is going to be intriguing. You know, yesterday we hit that high, 3.8 million shares. People are getting nervous out here. You're at 6.2 million on the way down. Amazon will come out with their numbers at 401. If we put this back on a weekly basis, let me see what we got here. So you go top side there, you get a small, so if I do 1170, if I do the large, let me put this on a monthly for a second. So on a monthly, it's just a one-way route, top side. Hey, we'll see where that shakes out. On a monthly, it's pretty amazing what Amazon has actually did. We take a look at monthly, folks. Amazon has not even looked to pull back on a monthly basis since $710, which is November of 2016. Pretty amazing. Stay right there, folks. Coming back when I'm in, Mr. Jason Path from the DutchBook.com. We are going to be talking markets. Dow Industrials right now up 116, NASDAQ down 30, down 83, S&P's off 3.5. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now up 120. You get the Nasdaq down 83. S&P's down 3.5. Let's go over to our man, Mr. Jason Path at thedutchbook.com. As we do each and every Thursday at 20 past the first hour, we got lots of action. Jason, what's going on, brother?
Tom, how are you, man?
I'm doing good. Yeah, great to talk with you too. I'm telling you, we got markets moving. Your dollar is getting closer to 95 again.
That's right, man.
That's right.
Just in time for another tweet, you know?
I'll tell you. So, where do you want to start?
Hey, so clearly Facebook is the talk of the market today. I can tell you I'm doing a lot better than Mark Zuckerberg. I can guarantee that. You know, tough release for him. Clearly a breakdown from a communication perspective, not to get too editorial here, but just a bad call, bad numbers. Obviously, the impact on the market today. Honestly, stepping back, you know, my opinion is, and we have no position in Facebook right now, but it represents to me a pretty strong buying opportunity when you look at the depth of the move. A number of other analysts have echoed that. So as bad as it was, it still feels like the market really strong reaction, and to me that tells us where the market is. It's a nice bellwether. You know, there's been a lot of upward momentum in these FANG stocks, and
yes,
we've all been well aware of that. But you know, Netflix, remember, you know, big.
Oh, listen, that's how they trade. I know what you're saying, man.
Yeah.
You know, it's pretty wild. I mean, even with all the volume that we have out here today, on the weekly basis, the volume is going to be dramatically lighter. So, than the last downdraft. That downdraft that we had in March. Bottom line, the week of March 23rd, we did 451 million.
That's right.
You know, so, you know, there's some damage done to the chart, but, you know, bottom line is that we've seen them shake it off before. It sounds even weird saying it, Jason. Do you know what I mean?
Yeah, absolutely.
You know?
It's definitely, you know, it's a tough spot. You know, the other company I think about, somebody like Snap, you know, his report here in a little bit. I mean, they got to be, I would think, nervous. They've had a lot of issues with their interface, and they had a bad release last time.
Yes.
Obviously a direct competitor.
And it seems like that Facebook's Instagram, I mean, they're kind of following, they kind of grabbed everything out of Snap, right?
That's right. And Snap, I don't think they're headed to a good release anyway, but the market is clearly got an itchy trigger finger if you don't just totally nail your numbers. Now it works to the upside too. We saw Google obviously blow it out of the water.
Yes.
And be well rewarded for that too. It'll be interesting. Obviously, we're all looking to Amazon here in a little bit. I'm pretty optimistic. I think it'll be a good release from Amazon. Certainly want to look at their high margin, their web services and their marketing businesses, and I think that'll be a good story coming out of the release. Those look like they'll just grow into infinity, those units. And,
I know.
I think Amazon will look more like Google. Whereas Facebook and Netflix both took a hit, but
and they have all different business models too. I mean, Amazon seems that Tommy was talking about this morning on the show, is that the differential is that the Facebook model, no doubt, they have so many billions already. How do you grow that exponentially? Where with Amazon, they have the market, but the very part of the market is still very small, folks. It's just that their market is so huge. I mean, they can grow multiple markets in a huge way, and never mind getting in a new market, right? Well,
they're well diversified, and if you look at Google and Amazon Google's got YouTube, mobile, search and advertising. They're well diversified, whereas a Netflix, they're selling, subscription-based streaming, and that's about it.
Yes.
Developing your own content is not diversifying your business model, even though they spend a couple billion a year on it. So I think these undiversified super cap companies it's just going to be a more volatile, bigger gamble type situation than a Google or an Amazon, because Amazon has a slightly down quarter on Prime. They've still got 50% growth in web services.
I know.
And they're just now coming on with marketing. It's just to think what they could do with a marketing division is it's just going to be exponential growth for years.
It is. So let's talk to Bitcoin. So you really wailed in that Bitcoin, man. This is so cool. Because it's really amazing that when we look at it, I believe, let's see, trade 5. You're talking like 15 trading days ago. We're at 5,700, man.
That's right. 30 to 40%. Since 3.5 weeks ago.
Yeah.
We continue, and I was just checking the metrics before it came on. Number of users is up, transactions is up, trading volume up. This is a highly reflexive asset. When it starts to trend up, more folks want to pile in. Now, you'll also have more sellers, but that's where you get the volatility that is generally correlated higher with higher price, because as this thing moves up, man, you open the journal and Bitcoin's back, and you're watching, or listening to something in the car, and here comes Bitcoin again, and can it do it again? And folks pile in, man, and that thing starts to work its way up, and we have yet to see a significant correction in the last 3.5 weeks.
And what's amazing, folks, is that if you haven't seen how Jason goes through his stats in the newsletter, please go over to thedutchbook.com. It's an amazing newsletter. And what's so cool about it is that when this was coming down to the lows, right, no one cared about Bitcoin, but it's not like when we're doing price and volume. Bottom line is that he's pulling the data, and guess what? No one's searching it. No one's doing anything. It's like the lonesome dog that's laying out there, right? And what's a mind blower, and this is just like the markets which have always been so intrigued with, that everything that goes higher, that's when people get all excited. And it's like, oh my God, how do you do this? But people do it continually. It's not that that's really high now, but that is how markets move, which is crazy, man. Because on a longer basis, people can lose a lot of money when they keep buying highs.
That's right. There's two sides to that coin, but yeah, absolutely. It's again, the term I use is reflexive. The higher it goes up, the greater the chance it's going to continue to go up.
Yeah.
A lot of hedge funds operate that way. Real strong momentum-based strategy. It will turn, and that's why from our perspective, we dig very heavily into the data to see what correlated with not only a rise but a turn.
Sure.
And so we're monitoring that. But right now, the sun is shining brightly on Bitcoin. We see no narrative for a correction anytime soon.
And
We've been consistent on that for the last 3.5 weeks, and it just continued to work higher like we thought.
No doubt, man. And what's intriguing is that, it had a chance, basically yesterday and the day before to kind of back down, because the SEC turned around and says they want to wait a bit. They actually, and it wasn't there's ETFs in there, but the first people in there, folks, were direction shares. And they put that off until September. And then Duffy came out with the CME today, and he said, well, listen, we're not going to expand the futures just yet. So there's a couple negative stories, but yet it wouldn't back off, because I think it got a lot of people's attention that, hold it, are there really going to be ETFs? Because if there's ETFs in this, man, the bottom line is that it's going to be very easy to buy. If it's very easy to buy, absolutely. Guess what? Bottom line, you're going to have more volume. So pretty intense.
Yeah. The ETFization would be through the moon. But to me, the story is Bitcoin's up. Right? Yeah. Like the ETF underlies that, and I get that, but I mean, when my wife's talking about, hey, Bitcoin's back when I walk in at night, right? Like that tells me that's the test, and that's where she's been.
Totally.
She's like, hear more about Bitcoin.
Oh, man.
That's the story, and that just brings people in. They pile in and keep sending it higher, man.
You got to love it. Folks, every Monday morning, every Tuesday, Thursday, Jason Path right here. You can go over to thedutchbook.com, get a great newsletter. Jason, you have a great one, safe one. Look forward to speaking to you on Monday.
Man. All right.
Thanks,
soon.
Man.
Take care, bud.
Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 122. You get the NASDAQ off 81. S&Ps are down 3. If we go inside the NDX 100, we take a look at the strength versus the weakness. We know good old Facebook is down 19.2%. Pretty intense. Biogen is off 12%. You got Align Technologies rather off 4.65%, and Electronics that's 3.2%. Putting strength into the NDX 100. Xilinx is up $6.98, or 10.5%. You have Qualcomm up 6.5%, or $4. American Airlines is trading up 5%, or $1.94. Inside the Dow Industrials, strength versus the weakness inside the Dow. The strength out here is going to be Boeing putting 25 points, positive points. 3M 25, Travelers 21, Dish Networks, Disney 15, taken away from it, Big Mac. McDonald's down, McDonald's is putting 18 negative points, Home Depot's putting 8, Microsoft is putting 7. Some of the higher volume equities out here in the market today. Of course, Facebook's going to be one of the big ones. Advanced Micro is the highest volume equity up there. That's up $2.20. We got NXP Semiconductor. That's down $5.82. Qualcomm is saying they're not going to pursue that. China's taking too long. Ma Bell's up 15 cents. Nielsen Holdings. Oh, let's see what's going on here. So Nielsen is down big numbers, it's down 25%, trading out at $22.61. This thing fell out of bed, and check this out. This is what's going to get really intriguing about this. So that's an equity that was trading $55 in 2016. You're trading 22 right now. We bring this back. Yeah, this is going to blow out all. You know what's the mind blower about this, folks? Okay, let me pull this up. So this is just like Arbitron. Okay, so Nielsen, bottom line is that they measure, customers worldwide. Bottom line, just like Arbitron, guess what? The measurement business right now, flat out, has to do with proving how many people are on the site, how long they've been on the site, where they come from, what the zip code is, and guess what? You don't need Arbitron anymore. You don't need Nielsen, because both of those companies, they were predicated on selling to huge advertising shops. They basically sold a bill of goods on a continual basis. The market bought the bill of goods. They no doubt buy it. And as when you say an Arbitron number, it's arbitrary. Every time that I used to look at these, there's no way that they could prove that so many people are listening. That's the real bottom line. The samples that they take every month are really small. Bottom line, though, this is how basically corrupt the large advertising business is in general. What happens is that those large advertising agencies, the Arbitron, the Nielsen, and then all the large companies, well, large companies themselves were putting up with it forever. About 4 years ago, the large companies got together. The Procter & Gamble's of the world got together, and they says, you know what, man? We've been listening to these guys for 50 years, telling us how many eyeballs they actually had. Well, they start challenging it. And once they start challenging it, these companies had a huge problem on their hands. Scandals, all of the above. So I suspect, let me go see what they're actually saying about this equity. I suspect that's going to be some of it in there. Where are you again? Nielsen. How did you just disappear on me? Here we go. Okay, so let's see what they have to say. Okay, so this is even funny. So the market's not believing this at all. They're claiming their estimate was 507 million. Oh no, that's what it is. They were going to do 507 million. They did 468. Earnings per share revenue 1.7 billion. They did 1.65 billion. So they lost a quarter of their shares after cutting profit forecasts and saying Chief Executive Officer is going to retire. Oh yeah, he's getting out of town quick. The company is pursuing a plan to bolster its performance. Our progress was not reflected in our financial results, which are disappointing and came in below expectations. The Chief Financial Officer said Nielsen is mulling options for its buy segment, which tracks consumer purchases. You know, it's so funny. So watch what they do. Tracks consumer purchases. You don't need that anymore. Its watch unit focuses on better-known practice of monitoring TV, radio, and internet habits. The company said it doesn't have a fixed timetable for completing the strategic review. You know why, folks? The bottom line is that you're not going to have a strategic review because guess what? Now monitoring is on real time. Real time. That's the bottom line. You don't need an Arbitron, you don't need a Nielsen to tell a client exactly how many people are watching, looking, listening, all of the above. Pretty intense, no doubt about it. We go over to the GDX. So inside the GDX out here today, it's surprising that it's not down a lot more, and this is why. So the GDX is down 39 cents. You're trading it at $21.40. Bottom line is you come into the lows from last week. You know, you're still coming in with tremendously lighter volume. Right now we've done 28 million versus 51. They'll throw some volume in here at the close. That being said, you had Barrick come out with numbers, and these numbers weren't good. And Barrick is the second largest weighting structure inside the GDX. That is coming into its high volume low, $11.07. We hit 11.06. Barrick might save itself. You know, we'll see what we can shake out. It's done 19.5 million shares today versus 36 million. So you're coming in for the test. You have not got rejection of price yet. It's Newmont that is saving the GDX out here today. Newmont is 10% of the GDX. Newmont's had quite a day. We got up to a price point of $38.63. Right now you're at $37.93. You get some juice behind it. Newmont right now has done two different things. It got back in a higher range. That's the first part. The second part is really much more important. It broke its downtrend that had started all the way from April 19th. April 19th, Newmont was $41.96, and you broke this. We'll see whether we can get more volume. It's a break with conviction is wide price spread, accelerated volume. We have wide price spread. You know, volume-wise, I wouldn't say it's accelerated volume yet. Yesterday we did 4.7 million. Today we did 4.6. If we see someone throw in another 200-300 shares at the close, then we can say that we have that break with conviction. Royal Gold. Royal Gold had a tough time at the highs once again. Bottom line is that that baby is pushing off $3.50, and that is back in the lower consolidation. Royal Gold broke out on the 3rd of July, got up to a price point of $98.58. Bottom line, you're right back in this consolidation. If we take a Royal Gold and we push this back just a bit, not the end of the world, but $87.94 is the number you want to watch. Ranggold Resources. We go take a look at Ranggold. Ranggold Resources, bottom line, still bouncing along the bottom. No big deal there. That's down 37 cents. Ranggold comes out with their numbers on the 9th. Stay right there, folks. We'll come right back. Our phone number is 877-927-6648. We have, whoops, let's see. Not that one. We come right back, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best of the best. at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now up 119. NASDAQ is down 83. S&Ps are down 3.5. Let's go over and look at Amazon for a second because it looks like market cap-wise, yeah, so this is pretty cool. So watch this. You get a market cap of $876 billion. And let me just see what Apple is. It's that billion. Oh, market, look at that. So Apple's right next to the trillion mark. Apple is $954 billion. Apple's coming out the 31st. So Apple really would have the first shot of reaching the trillion mark. Well, we'll see what ends up happening after the close. Bottom line is, though, that's pretty intense in the aspect of where even Amazon is right now. Facebook, bottom line is that took off some monster market cap. Right now, we're at $507 billion, so that baby came down a couple, 150 billion or whatever. Big numbers. And if we go take a look at some of the largest owners of Facebook, taking a, well, it depends whether they took a haircut or not, because the bottom line is that what you do have with Facebook, this baby, when you take a look at it, well, you know, when you do take a look at it, let me see how far we're going to bring this back. Well, this is pretty intense, actually. If I bring this back, because it was in a consolidation, you could make the case that if you bought Facebook, well, it's not that bad. October of 2017. We're trading at October of 2017. Largest owners out there, most of them are, yeah, they're all funds. You get Vanguard owns 7%, BlackRock owns 6.5%, Fidelity's owns 5%, State Street owns 3.5%, T. Rowe Price owns 3%, Capital owns 2%. They're all, yeah, they're definitely all funds. We go over to Amazon. We take a look at Amazon. We do the same type of exercise here. We know good old Jeff Bezos is the big number one out here, no doubt. He owns 16.2% of it. He owns 78 million shares. And then they're the same players right after that. You get Vanguard, BlackRock, Capital, Fidelity, T. Rowe Price, State Street. It's pretty, I guess if we looked at all of them, actually, let's do that. I want to go to, we'll look at Google, because all the funds, that's how these things are going to shake out, which is pretty intense, because what you are going to see is that these funds will take a hit today just with Facebook. And yeah, same deal with Google. Vanguard, but then you have the two owners, BlackRock, Capital, State Street, Fidelity, T. Rowe Price. Then you have Eric Schmidt, who used to be the CEO. He's got a big number. He owns 1.27% of it. So that's a decent number when you start talking about the amount, when you're talking about an $1,800 stock, a $1,200 stock. We go over and take a look at the XAU, the HUI inside the gold market. So XAU out here today, it goes downtown. You're at $77.18. And this little baby is going after its low that was out there at 76.36 going back to February of this year. And we'll see what the volume is at about 8 o'clock tonight. The Gold Bugs Index, same type of setup inside the Gold Bugs Index. Gold Bugs Index right now, that is down $4.80. The swing low is, oh, this could be a problem. 166. Let me bring this back a bit. Yeah, this is actually breaking. Oh, I see what you're doing. Yeah, this is a little problem child. 160 you can go after. NGD. Now this is a big problem. Now this one here, this is an equity that actually does take in money. Now this is what's always intriguing inside the gold market, folks. So this takes in $900 million a year. Bottom line, still doesn't make any money. They have a couple, basically, you know, good-sized mines. This hit a low today of 142, a gap lower. Now the danger here on this is that this little baby, we bring this back, we're going to see like 75 cents is the danger. And what it is, you know, we had a high out here established in 2011 at $14.15. You break downtown, and you get a 75-cent low out here. It's like, oh man, are you really going to go there? And what was intriguing is that even at the end of last week, this equity actually didn't look that bad. You know, it was like, oh, I was looking at it and going back and forth, you know, saying, it doesn't look that bad. But what stopped me from jumping in this baby was that 75-cent low. You know, bottom line, that low is dangerous out there. And when you've come down so dramatically for such a long period of time, well, guess what? Most of the time they like to go in there and hit those babies. And in this particular case, that looks like is exactly what it's going to do. An Eco Eagle, that's down 233. This also come out with numbers. Let's see what they had to say. Number-wise, there was a big miss. So estimate was 8 cents. They made 1. Revenue, they made the revenue, but there's something inside these numbers that just aren't there. Meaning the expense ratio went up dramatically. So their estimate was 536 million. They took in 556. So whatever they threw inside that number, it's a big one. There's no doubt about that. Let me see if Gold Corp came out. Yeah, I think Gold Corp came out too. So Gold Corp, oh, that got smoked too. So Gold Corp is down 81 cents. That's breaking a B point with volume. That's the problem. So your A point on this is 14. Your B, it's only $1. Okay, so that's 12.65. You're 12.55. Let's see what they had to say. You know, the GDX is really in good shape compared to bringing these equities up right now. So let's see what they have to say. That's the conference call. I don't want that. I want those numbers. Let's see. Nope, not that one. Not that one. Sorry about this, folks. We'll get this up. Oh, look at that. Foreign exchange. Oh, this is intense. Okay. Look at this. So foreign exchange losses. Okay. Let me see if I can get the right one for you. So, what the heck did they do here? Okay, so let's take a look at it. They had a net loss of $131 million, 15 cents a share. It was impacted by a non-cash foreign exchange loss of $178 million. Man, what are they doing? or 20% share, primarily arising from deferred tax balances. Deferred tax balances. Operating cash flow and operating cash flows for the 3 months ending June 30th were 158 million and 310. Gold production was 571,000 ounces. All-in sustained cost of $850 compared to $650 3 months ago. Project pipeline continues to advance. I got to look at this. The big number on currency cost, because realistically, they shouldn't have had a big currency cost. The reason being, folks, is that what has happened is that the Canadian dollar actually got weaker, and they should have had a plus there, not a minus. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 108, Nasdaq's down 80, S&Ps are off 3.5. Let's go to John in Bangor, man. Hey, John, what's going on, brother?
You're hot and humid, Tom.
You gonna send us down some lobsters?
Yeah, what do you want?
I'm only kidding. I love your town, though, man. You're in a great town, no doubt, man.
Yeah, it is. Hey, yesterday, a company went public called, the symbol is BE, Bloom Energy, and they went public at 15, and because of the offering, I wanted to buy a couple hundred shares, but couldn't get in. And so then it went right up, 60-odd%. How do you watch these offerings? In other words, can you apply you know, that they traditionally will do some kind of a Fibonacci, 60 retracement.
Yeah, what happens is that, so Bloom Energy, folks, you know, as John just said, it went public yesterday. The baby, you know, got up to a price point of, what, 25. Today it traded from 24 down to 20. You need this to trade for at least a couple months so you can get a handle on it. The first couple of days, it's not going to tell you anything. It really is not. So what do these guys do? I know they're in the, what, the energy renewable business?
Yeah, well, they're in the fuel cell business, and he's got a proprietary thing where he takes some hydrogen and passes it over his, you know, it's the fuel cell, and comes out with electricity. And of course, if you listen to them, they say it's cheaper and more efficient.
Yeah, no, that's a technology they've been trying to basically get going for quite a while. I would just, if you were going to, you know, look for it, you know, just wait a month or two, and, you know, you'll get more information out of this thing, that's for sure.
Okay.
Cooking, brother.
Thank you for your help.
Have a great one, man. Have a safe one. So as we come into the close here, let's go over to Amazon, folks, because Amazon is going to be rocking this NDX 100 in another 5 minutes and 20 seconds. Probably, oh no, not even 5 minutes and 20 seconds. We're talking about a minute and 20 seconds. They come out at 16:01. Right now, Amazon's down 57, trading 18:06.39. You stay right there, folks, when we come back with not only Amazon, but a lot of other numbers. We are in the thick of earnings season. Right now, you have the Dow up 112, NASDAQ is down 79, S&Ps are off 3. We'll be coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
No matter what kind of trader you are.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Ignore the opinions of others. Whatever people do, think, feel, or say, don't take it personally. They're going to have their opinion according to their belief system, so whatever they think about you is not about you, but it's about them. Market-wise, let's take a look at it out here. We had the Dow Industrials up 112, NASDAQ down 80, S&Ps down 1. Gold contract down 9.50, trading at 12.22. We had silver down 16 cents, $15.42. Light sweet crude flat, $69.62 a barrel. Notes and bonds. You had the 10-year note down 11 ticks, 119.09. 30-year off 25 ticks, 142.20. They both are coming back into their strengths from May. King dollar up 426 ticks, 94.555. The euro's at 116.45 to 1 US dollar. Yen is out here trading at 111.22 to 1 US dollar. You want to see something wild, folks? Amazon, AMZN. So what do we have? Amazon come out with their numbers. Bottom line, Amazon closed at a price point of $18.08. And right now you're trading out at a price point of $18.64, but that's not the number, folks. When Amazon come out with the number, so check it out. You were at $18.08. Amazon went down to $1,725 and then blasted higher into this $18.80 area. If we go over to the NQs and you want to see some volatility, you get the volatility in spades. When the Amazon went south, bottom line, the NQs got down to a low of 74.62. Right now, 73.62. Right now, you're at 74.30. You had a 90-point spread in the matter of a minute and a half. And why? Here's why, folks. Because what you had, when this first number come across, you had Amazon, their net sales were lower, but guess what? This is what you had. The net sales, the estimate was $53.4 billion. They come in at $52.9 billion. That being said, guess what? They brought so much money to the bottom line, it's insane. They doubled this thing up. This is what blew people's minds, is that their earnings per share, they were expected to make $2.49. They made $5.07. So, bottom line is that we'll find out what's inside these numbers, but you're talking about a monster number that Bezos decided to bring to the bottom line. Now, what happens with Amazon, which we know is this, is that the amount of money that Jeff Bezos has spent bringing this company forward is incredible. At any time, folks, and this is any time because he does so much business, anytime he can just turn the switch back. And as soon as he turns the switch back, guess what? The expense ratio goes down dramatically. The money comes right into the bottom line, and that's what I expect that he actually did out here. And guess what? We never know when he's going to do that or doesn't know when he's going to do it. That's the real bottom line. And evidently, he basically has done it in this quarter. Because what you have here, of course, is that we just hit a new all-time high. Let's see, 1858. The all-time high thus far is, oh, no, look at that. We didn't hit it yet. It's 1863 from yesterday. Okay, so we'll see how this shakes out tomorrow morning. But bottom line, big numbers, big numbers out here. We go take a look at the, let's go take a look at the gold contract next. Gold contract, folks, came down $8 out here, $9 out here today. You did 275,000 contracts. That is coming into the highs of the lows that were generated out here last week. And that high of the low is 429,000 contracts. We're into that bow, which is going to be dangerous coming into Friday. So bottom line is that this low out there of 1210 very well could get tested. Let's go see if they have any more information on Amazon. Here we go. Okay, so let's see. Yeah, so Amazon just added, this is pretty amazing. Right now, just out of what Jeff Bezos owns and Amazon, it just added $4.9 billion to his net worth in Amazon shares. His Amazon shares right now are worth $154 billion. The cloud computing sales year over year up 49%, big numbers. Let's see what else we got. They're expecting their third quarter guidance. Let's see, 54 billion to 57 billion. That's a number that they already had. Yeah, I'd say that the biggest one in here, their net operating income for the third quarter, they're looking. Oh, look at this. This is pretty amazing, actually. So this is what's going on here. It's going to be really wild overnight. as analysts go through these numbers, and all of us go through these numbers, watch this. The third quarter operating income, folks, this is the guidance that he just gave. Income is going to be from $1.4 billion to $2.4 billion. So there's a $1 billion discrepancy. Not a discrepancy. Bottom line is that what that's all about is more than likely his expense ratio is going down. It's going to be really intriguing to see if, in fact, he's built out for a while. You know, he's been basically putting huge amounts of money into Amazon for a huge amount of time. And if that's the case, he's already printed money, but you can see on that guidance going forward, the estimate had been $1.28 billion. They are saying that they're going to have an operating income of 1.4 to 2.4. Huge number, man. Huge number. The operating income this quarter, this is just amazing how much money he actually brought to the bottom line. So the estimate had been $1.71 billion. He brought to the bottom line $2.98 billion. Amazing. His AWS, okay, which is the cloud sales, net sales, $6.11 billion. That is a growth of 49% year over year. Huge numbers, man. And it's going to be, you know, and this is what's always dangerous in Amazon, particularly, is that you just never know when he's going to basically pull the switch. And he pulled the switch, and he pulled the switch in a big way, meaning that, you know, bottom line, you bring the expense ratio down, his cash flow is dramatic, pretty intense. Dow Industrials finished up 112, NASDAQ down 80, S&P's up 1. Stay right there, folks. Got our man, Mr. Basil Chapman, coming back with us, growling and prowling with us. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Amazon, no doubt, is going to be the big number out here today. It was down $55 today. Now you got it up about $50. We'll see how this shakes out tomorrow morning. Because the high was generated out here yesterday. But bottom line is that when you're talking about bringing to the bottom line, he brought that to the bottom line in a big way. And if I show you what the estimate had been, it's pretty intense. So if you happen to be watching Tiger TV, you're going to see that revenue-wise, bottom line, they were shot revenue-wise by 700 grand. But guess what? That, no, let's see. No, 700 million? Yeah, 700 million. No. 1 billion. Yeah, 700 million. But bottom line wise, look at this number, $5.07 to the bottom line. Now, just to give you an idea, folks, $5.07 in 90 days is more than he did all of last year. All of last year, Amazon made $4.55 for the year. This year, they planned on making $12.40, but thus far, if we take the first 2 quarters, he's already made $8.34. So bottom line is that we're going to see these numbers go exponential. And it looks like the guidance that he did give going forward, the CFO gave going forward, basically says that. He still gave himself plenty of guessing room, meaning how much they're actually going to bring to the bottom line, because they gave a spread of over $1 billion. Let's go take a look at a few others that FSLR. Let's see, FSLR. So First Solar out here. First Solar closed at $53.67. That's trading at $49.50, and that looks like it's going to break out its lows. Yeah, that's going to break out its lows. The last low out here was $50. Let's see what they have to say. Okay, so the estimated loss. Man, look at this number. Blows my mind. The estimated loss was 3 cents. They lost 46 cents. Their net sales down dramatically. Their net sales, they estimated 501 million. They did 309 million. I'm not quite sure how the heck you can miss something by $200 million in 90 days. That's pretty amazing, folks. That is one monster number, no doubt about it. We go take a look at, I think, I'm not sure where the Electronic Arts came out. Electronic Arts was down $4.60. They might have come out earlier. That was at 141. Oh, man, it's down again. So someone knew something. They were selling Electronic Arts down all day. It was down to $4.60. Right now, it's down an additional $10. Let's see what they have to say. This is the gaming business. So Electronic Arts, the estimate had been $744 million. They came in with $749. That's revenue. Earnings per share, they were looking for $5. They came in with $4.85. Bottom line is that it's not a huge miss, but basically they're hammering that baby down. We go take a look at Expedia. Expedia out here, of course, the large travel company, that closed down $1.76 at $125.80. This is trading at a price point of $138. That's up $13. And let's see what they have to say. Expedia, the revenue estimate had been $2.88 billion. That's what they made, $2.88. It's always intriguing when they can come in right at that number. Earnings per share brought big numbers to the bottom line, though. 89 cents was the earnings per share estimate. They came in with $1.38. So decent number there. We go take a look at LRCX, Lam Research. Lam Research closed out at $177. That was up $4.50. This is up trading. This is trading down. This is trading down $5 right now at $172. Now this is going to be dangerous for Lam Research. Lam is off this high of $234. You're at $177. It has the first leg down on Lam Research was monster volume on the monthly, 86 million shares, and this was one rocket ship. I mean, Lam Research was an $18 stock in 2007, 2008, goes up to $234. Let's see what they have to say. Lam Research estimate had been 3.06 billion. They did 3.13 billion, so they made it there. Estimate earnings per share to the bottom line, 4.9 billion, $4.94. They made 5.31. So bottom line is that they made their numbers, yet it didn't do anything for them. We go into Intel, INTC. Let's see what Intel is doing out here. Intel closed at $52.16. That is trading right now at $50.69. And that's got some down pressure on it. They boosted the year view. The estimate had been $16.79 billion. They plan on doing $7 billion. The earnings per share for this quarter, let's see. No, that was, okay, so that's okay, so the revenue for this quarter, the estimate was 16.79, they did 17. Earnings per share, estimate was 96, they did 104. Now, in both cases there, you can see Lam Research as well as Intel, they basically are selling that baby down. That's going to be dangerous because the chip stocks in general can basically get the NASDAQ going topside as well as smoke that thing on the way down. CMG, Chipotle, CMG, let's see what we have here. This closed at $446. That was down $4.87. That is trading at $4.74, so that's up 30 bucks right now. And this is, you know, after the whole food scares, this is off the bottom pretty good. You know, 247 was the low that was generated in February of 2018. Let's see what they have to say. People have a short memory. That's the bottom line. Earnings per share. The estimate was $2.76. They made $1.68. The revenue must have went up if they're digging this thing. That's all I can figure. What they have in here, they have an adjusted earnings per share that's 10 cents higher. Where is your... I'm trying to find their gross sales. Well, bottom line is that that little baby, it is up. UCTT, and thanks, Dave, for putting all these up. Appreciate it, man. So you get Ultra Clean Holdings. This had hit a low out here today, $14.57. This one, let's see what they do. They develop, supply critical subsystems to the semiconductor markets. That closed at $14.85. That is trading $12.70. Oh, this thing is getting smoked. This is down. This is quite a downdraft. This is down from $34 October of 2017. This is going south in a big way. Western Digital, WDC. Western Digital out here, that closed at a price point of $77.09. That was trading up $1.46. That is up 90 cents, so that's up an additional few pennies, but this is down from 106. Stay right there, folks. We'll be coming back with more numbers. Let's just go check it back on Amazon, see what Amazon's doing. Amazon is at 18.27. So Amazon, bottom line, we'll get back to it. You talk about price spread, incredible price spread in Amazon. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now finished up 112. The NDX 100, you talk about moving around, and that was all about Amazon moving around. It has been moving around in a huge way. If we go take a look at it right now. Now, what happened is this. This is what's pretty amazing, folks. Amazon came out with its numbers. So Amazon closed today at $1,808. It was down $55. When Amazon came out with its numbers, the first 3 to almost maybe 5-6 seconds, it traded down to $1,725. Okay, it nailed the NQ futures. So the NQ futures dove in a huge way. I'll bring those up right afterwards. And then guess what? It shook everything off. Amazon went all the way up to $1,860, and now you're wavering between the $1,860 and $1,836. If we go over and we take a look at the NQs, what you're going to see is this. And what that was all about, I suspect, is this, is that Amazon, their gross revenue went down, yet what Bezos brought to the bottom line exploded topside. He can pull that switch anytime he wants. So this is what you had. We had the NQs. They were out here. They were trading coming into the close at 74.16. When Amazon came out, they went down to 74.24. That was the lows of the day, and then they exploded topside and went all the way up to 74.50. Monster number, folks. Okay. Bottom line, you had a 90-point spread. Let's go to Rich in Oregon. Hey, Rich, what's going on?
Hey, Tom. Thanks for taking my call.
Sure. Thanks for calling. Thanks for holding.
About the good old Amazon. And what does the after-hours trading swing say to you, if anything?
Well, it's telling me that you're going to go for the highs tomorrow. And the highs are 1863, you know.
Okay.
So what we've done, I mean, you talk about volatility, though, man. This is, I would say that I believe that would be the highest volatility I've seen, folks, since like probably 2001. Right? No, 2000. Because what happened, and I remember this so well, JDSU bottom line, this was an equity that had run from, on a split-adjusted basis, it had run up into the new year from about 450 to 800, and it imploded on January 3rd or January 4th and went down to about 550 in about 2 days. You know, so in this particular case, I can understand why the computers, what ends up happening is this, is that when all these numbers come out, folks, okay, the program traders, bottom line, the computers read the news really quick. They just start firing deals off. Bottom line, that's where I suspect that Amazon got down to that 1725 because they didn't do their gross numbers, which is always a problem. And then simultaneously, what they brought to the bottom line, though, was insane. You know, so, you know, tell me, what are you in the option market?
No, I'm not.
Oh, okay, okay. So,
I'm just a gambler.
You know, I was just curious, right? That's all. So, you know, what I would do is, if you're already on this, if you're buying it and you're looking to sell it, I would have the order in. That's what I would do. I would have
to sell.
Yeah, yeah.
Okay.
Yeah, because what you have is that, you know, and remember something, folks. You know, Tommy and I do the Nadex program in the morning. If you haven't test-driven that Nadex platform, great time to do it. You know, I was out there trading that NDX coming into the close, but you have to have the orders in. If you're basically going into a short-term trade, that's how I would have them in, because if you get the volatility, you know, in this particular case, we got the volatility both ways. So it wouldn't have mattered if you were in the NQs, as long as you had a bull or a bear, as long as you had the order into cover if you were a bear and sell if you were a bull, you know. So I expect you're going to see that, you know, volatility in the morning. What I really expect is that when analysts start doing these numbers, they're going to basically come up with the aspect that, you know, as I've been saying, that Bezos can bring anything he wants to the bottom line. And in this particular case, he brought a massive amount of money. And what he's saying, what the CFO is saying in the press release, is that they're saying that there's a spread. So listen to this. This is what's amazing. They're saying that the spread for the next quarter, okay, is over $1 billion. They're saying that, okay, listen, we might bring 1.1 billion to the bottom line, but we might bring 2.4 billion too. It's like, really? You know,
pocket change, right?
Yeah, that's a big number. And what that is all about, folks, is that it would be up to Bezos as to how much he wants to expense building more warehouses or building whatever he's building. You know, as soon as Bezos stops building, which he, you know, the last time that he did this, that he basically surprised the market and came in with monster numbers to the bottom line, I believe it was about 2.5 years ago. And that's when everyone realized that, oh my God, all he has to do is pull back for 90 days, and the amount of cash that goes to the bottom line is pretty intense, you know? The real question is going to be...
Based on what you're seeing, you're saying this is a short-term trade, basically.
Yeah.
Get out and then wait for it to pull back.
Yes, I would. Yes, exactly. Yes.
Okay.
Yeah.
So tomorrow, do you think the combination of Amazon maybe spiking to the 1860 range and the other FANG stocks are going to save the NASDAQ, or Facebook didn't do it today?
Well, here, let's look at a few. So you get Facebook right now, 176. That's still at 175. We have, let me just look at a few more that Intel is going to hurt the NDX tomorrow morning because Intel's a big weighting structure. That's down $2. So that'll put some big selling. The NASDAQ is a modified capital weighted structure, and Intel is a large portion of that. So Intel will put some pressure on it on the downside. If Amazon opens up $50, that's going to basically put some good numbers on the upside, probably negate that. Google right now is up $4 today. It's up a couple dollars right now. I don't expect Facebook to get lower. So Facebook, I think it's going to be about Amazon. That's what it looks like. You know, the chip stocks, what I would look at first thing in the morning before you actually do something, I would look at where those chip stocks are. Because what you have is that Xilinx, XLMX, that had a good day out here today. That was the largest mover inside the NDX 100. That was up $6.50, $74.49. Now, that being said, Lam Research is getting hit after the market close. Well, here, JNPR, thanks, Dave. JNPR, Juniper Networks, looks like it's also getting hit. So this closed at $28.25. That's trading, that's not that, well, it's trading $26.70. That's coming off the highs. I would I'd go through a few chip stocks, and as long as they're not getting killed, and you got Amazon up, you know, if you're going on the NDX, that's saying that this and the NDX is going to try to get higher. Because what you will have is this: the amount of energy that got expended inside the NDX 100 because of Facebook today is huge. I don't expect Facebook, you know, in the next few days to go down another $5 or $10. I do expect it has a gap at 161 that looks like it wants to be filled.
Okay, Tom. Thanks very much.
Have a great one, man. Have a safe one. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at Juniper Networks, JNPR. So Juniper Networks closed at a price point of $28.28 today. The low for the year is 23. The high is 29. This is trading right now at 26.40. Let's see what they say number-wise. So number-wise, you go like this. The estimate, earnings per share estimate, 44 cents. They made 48. The gross revenue, where are you? Yeah, I can't find this gross revenue number. Oh, I see. Third quarter revenue, they expect, so this is second quarter numbers we're giving you. Third quarter revenue, they see going down. So the estimate had been $1.22 billion. Now they plan on doing $1.14 billion to $1.2 billion. That number, let's go LOGM. Let's see what this equity is. This is, they offer remote connectivity, for mobile professionals. The low of this is 99. The high is 134. It's trading at 104. This is getting whacked good. So this equity had been down $3.85 today. It's down an additional $14 after the close. Man, when they whack these things, they whack them. So let's go take a look at this, what we have here. This generated a high out here, $134. Now you're at $90. And number-wise, let's see what they're having to say. So the earnings per share estimate was $1.25. They made $1.32. Revenue, the estimate was $305 million. They made $307 million. The adjusted earnings per share estimate basically missed estimates. So whatever that. Oh, thank you, man. Thanks, Dave. Appreciate it. So this is GoToMeeting.com. Which, man, they changed their whole thing. Oh, this is interesting, man. That is really cool. What a weird name, man. That's GoToMeeting.com. Okay. Good old Boston, Mass. 2,600 employees. Numbers. Yeah, they've on a 3-year rate, they're growing at 64%. Bottom line is that their numbers, that being said, they missed in a huge way because when you oh, log me in. That's so funny. I see. Okay. LOGM. Log me in. I feel like I'm I feel like I'm almost at a Chinese restaurant when I actually look at the spelling. Though, what happens is that it's one word. Log me in. I feel like it's getting me hungry. Revenue, the earnings per share number, folks, bottom line went down in a big way. The first quarter, they did $1.21 to the bottom line. This quarter, 18 cents. They were expecting $1.36 next quarter. They're going to have some problems in paradise here. That's what it looks like. Amgen. We go take a look at Amgen, AMGN. Amgen out here, big biotech. That closed at 194. That's trading 196. Man, you talk about numbers out here today. This is some big numbers. So, earnings per share, the estimate was $3.56. They made $3.83. Not bad numbers. Okay, so now let's just go back, check on Amazon again, then we're going to check on the rest of these markets. So Amazon's hanging tough at $18.49. We closed at $18.08. We traded down to $17.25. We traded up to $18.60. Right now, you're at $18.49. Let's go take a look at some of the, Twitter come out, TWTR. That's pretty interesting. Did Twitter come out with numbers too? Let's TWTR. Let's go take a look at Twitter. So Twitter closed at $42.94. That's trading at 43. Numbers on this. This is going to be... Oh, no, they didn't come out with numbers. They're just flat. Okay, they're just flat. Earnings in the morning. Thanks, man. Okay, so earnings in the morning. Well, this is the week for earnings, folks. Bottom line is that yesterday and today, I think that was about the biggest. Oh, BZH. Let's go take a look at BZH. BZH. Biza, the home builder. This closed at $13.55. This is trading at 1355. Let's see what they have to say. Their revenue estimate was $512 million. They did $511. Earnings per share the consensus was 39 cents. They came in with 41. This is one of the weaker home builders, that's for sure. This thing got smoked yesterday. Actually, let me pull this back for a bit. Okay, so if we put this on a monthly, oof, my God. This I've been through this before, meaning that if you want to see an equity that didn't do a stop loss and they didn't sell their land in the crash of 2006, folks, this is it. Beasley was a $410 stock and crashes down to $2.30. Now that was, you know, they did reverse stock splits. Bottom line, absolutely zero traction. And what that was all about, by the way, was about the aspect that on the way down, Beasley did not sell their land. And if you want to take a look at the other side, I'll show you Lennar, which did. And the difference over the longer term is pretty incredible. The high in Lennar in 2006 was $68. Now this got slammed also, went down to $3.40. But guess what? You're already back at $72 at a new high in January of this year. And what the difference is this, is that when the real estate crash came, what ended up happening is that Lennar sold huge amounts of land. When they were selling the land, no one knew that the real estate business was going to basically go down for approximately 3 years and a wipeout city everywhere. Two different things ended up happening. Is that Congress put a law into effect that you could do excuse me, folks, that you could take back the taxes that you had paid. Most of the time you only can do it for 3 years. They put it that you can take it back for either 5 to 7 years. What ended up happening there is that the housing market had already paid so many taxes that they got that amount of money back from prior years. That kept them in business. More important, though, what ended up happening is that because Lennar had sold the land in 2006, guess what? They came back 2.5, 3 years later, bought some of that exact land back at almost the lows, and there's the difference. The difference that you see a stock that basically had a 400 high, that's not going to get back into that level. It's just not going to happen. Big number. So that's where stop losses come, because you never know when the market just doesn't stop going down. Let's go take a look at this. There it is. Okay, thanks, Dave. Dave's taking care of me out here today. I met Mr. Dave White. Look at this. So the Winklevoss twins, the Bitcoin ETF was rejected by the SEC. That's going to basically put some pressure, I suspect, on basically Bitcoin. Right now, Bitcoin's still trading at, I still have it at 82.28. But I expect we're going to see some pressure there. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's take a look at Starbucks. So Starbucks closed out today at 51.45. The low for the year is 47. The high is 61. That is trading right now at 51.80. Number-wise, go like this on Starbucks. So let's see what we got here. The earnings, the estimate earnings per share was 61 cents. They made 62. That's an adjusted earnings per share number. For the fiscal year, they had seen $2.39 to $2.43, basically same number. They went from $2.40 to $2.42, so they brought that in. It looks like their quarterly growth is slipping on competition. That makes sense, man. The bottom line is that they actually have some real competition out there now because of so many niche coffee places. They're also saying that they're seeing more price competition in China. So let's go swing back over to Amazon. Amazon is going to be pushing this market in the morning, folks. So Amazon, when Amazon closed today, it closed at $1,808. Came up with the numbers within the first 5 seconds, stayed there for about 5 to 8 seconds, traded down to $1,725, then exploded topside to $1,870. Right now, it's been fluctuating between the $1,870 and $1,835. Right now, you're at $1,868. The numbers on Amazon, they were down $700 million on their gross numbers. They were almost doubled on their net number that Bezos brought to the bottom line. It was a monster number, folks. The bottom line is that Bezos brought $5.07 to the bottom line, and that's in 90 days, they brought more to the bottom line than they did all of last year. $4.55 was last year. You can expect high volatility inside those NDX 100, the Qs, all of the above. Come join us in the morning, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking to you right back here tomorrow morning, 8 o'clock. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.